Time for news from the eNCA manager, Rofhiwa Madzena. Good evening once again. The World Bank has come out with a report on Sub-Saharan Africa, and of course it's not looking good because of the pandemic.
That's right, Sally. So we're talking about here, it's been driven by economic fallout of COVID-19, the global pandemic. Growth in Sub-Saharan Africa is predicted to fall to about 3.3% in 2020, pushing the region into its first recession in, get this, 25 years. And joining me to discuss this and the Africa Pulse report further is Cesar Calderon, who's the World Bank lead economist and a co-author of the Pulse report. Cesar, many thanks for your time this evening. Perhaps you could start with a clearer image of the impact that COVID-19 had on Sub-Saharan Africa.
Well, thank you for your invitation. You can clearly see two different aspects of the COVID-19 crisis in Sub-Saharan Africa. On the health side, the impact has not been as high or as alarming as initially anticipated. If you look at the numbers in terms of infections and in terms of fatalities, at the end of September, the region had only one confirmed case of infection per 1,000 people and about 25,000 deaths. Although, every death is painful, still the rates in the region are significantly lower than that in other developing countries and in advanced countries too. Part of this success is the fact that some governments in the region have acted rapidly. They immediately put containment and mitigation measures. They follow science and they incorporated innovative solutions. Also, the region drew from the lessons of previous epidemics and started, implementing effective communication campaigns, as well as I said before, a series of stringent measures. On the other hand, on the economic side, unfortunately, it wreaked havoc. Not only because the lockdown and a series of containment measures or immobility measures led to a drop in local production, a drop in demand, but also worldwide, a halt in global trade, in finance and in financing flows that have led, as you just said, to the region falling into a recession for the first time in a quarter century. The problem with the recession is that we don't know. There is still a lot of uncertainty about the future. We don't know how much the impact of the COVID-19 is going to be lingering. We may have to think that the region will have to live still with COVID-19 throughout 2021. And it's not a moment to let the guard down, both on the health side and on the economic side. If you think about the second wave of infections coming into Europe, for instance, the region must be prepared to continue communication strategies and continue strengthening their health systems in order to avoid a relapse.
Right. Let's speak about the regions that will be mostly affected in Sub-Saharan Africa. I know your report mentions the countries like Ethiopia and Kenya won't be too bad because they are diversified economies. But let's speak about those that are going to be impacted the most.
Well, the countries that are being impacted the most, for instance, are countries that are dependent on commodity prices, and especially countries that are dependent on oil prices to start with. That would be one group. So if you think about CEMAC countries and if you think about Nigeria, they're going to take a big hit in terms of economic activity. South Africa is also taking a big hit, not only because of external channels, say trade, say financing flows, but also because of some of these countries, and including South Africa, enter with domestic witnesses into this crisis. Countries that depend a lot on tourism in the region. If you think about Mauritius, Seychelles, Cape Verde, they are going to take a big hit. Some countries in the Eastern Caribbean in the Eastern Africa are also going to see some impact on tourism. And I think countries that are exporting gold, to some extent, they are going to, let me put it this way. All countries in the region are going to be hit, some more than others. The ones that are going to be hit the hardest are the ones where the lockdown measures have been more stringent, and the ones that depend highly on commodity prices, and fragile countries too.
Right. Now, what are some of the policy actions and investments that are going to need to be established to change the tide and to move towards a recovery in the sub-Saharan region?
I think one of the things that we have observed that has become highly important amid lockdowns and social distancing is the digital economy. Mm-hmm. So, I mean, Africa was already making some progress in terms of digital infrastructure, in terms of the use of digital financial services, where the efforts need to be redoubled, because the potential benefits for households and firms of embracing the digital revolution, of using digital solutions to increase productivity, to increase welfare, are tremendous. Still, there's a high percentage of the population that don't have access to rapid internet. So what needs to be done in this area, for instance? What needs to be done in this area is reforms to expand infrastructure, regulatory frameworks that put a premium on innovation and competition among mobile operators, and programs that can foster universal, reliable access to internet. And in this context, studies that are being conducted at the bank show that the Africa region has the opportunity to leapfrog technology, to go from 2G, which is still used a lot, to 4G. That would be one area where the region can invest. The other area I would say is agriculture. And again, the digital solutions can help increase productivity by connecting farmers to technologies, to new seeds, to fertilizers, connect them to inputs in general, and also securing food supplies.
Right. Now, you've mentioned agriculture and you've also mentioned the digital economy. But given the state of the current affairs right now, do you think that Sub-Saharan Africa will need to increasingly have to rely on bodies like yourself or the IMF so that they're able to plow themselves out?
I think the current problem that Africa has is that they still have massive investments to do in order for them to overcome some of the developmental obstacles in the region. And unfortunately, the fiscal space that these countries have is very limited. I mean, and we're in the middle of the pandemic, so it's very hard for countries in the region to increase revenues. So let's assume that countries have some success in raising revenues by, let's say, broadening the tax base or improving tax collection, or being more efficient in the way that they spend resources, or trying to tackle problems of illicit flows. Even though the amount of investment needed is bigger than that. So the continent will still need some assistance from the international community. But the way that the assistance can be pitched is not, I need to borrow money. I need to finance investments. Investments that are going to give the region the growth rate or the growth return necessary to repay these investments. Right. And the way to pitch investments in Africa is pitch it as investing in Africa is a global public good. Mm. And why is it a global public good? It is a global public good because by 2050, the region is going to have 1/3 of the global labor force. So if you think about the engine of growth in the future is going to be powered by Africa's youth.
Very interesting insights there. Thank you, Cesar Calderon, who is the World Bank lead economist and co-author of the latest Africa Pulse report. With that, let's take a look at how your markets ended off the day, rather. So global shares were rallying today, and this filtered through to the JSE. Generally, we saw broad-based gains with the banks down, and this despite the rand looking 1% in the green against the US dollar. So let's take a closer look at those markets.
interesting interview with the World Bank, and what he said that by, was it 2050?
Yes.
A third of the global labour force will be in Sub-Saharan Africa. But I did enjoy his phrase, fiscal space is very limited. Is that economic space or no money?
That's exactly. That's basically saying African governments don't have any money, and they're going to have to find other means of making that revenue. But very interesting conversation, as you say.
Yeah, it absolutely was. Thank you very much, Rofhiwa. Still ahead.